Hello and welcome again at Stocks Advisor channel. Here at our channel, we're looking for interesting buy opportunities for US-based stocks. Today we will talk about Amarin Incorporated, traded at Nasdaq, ticker name AMRN. Well, we already did analysis for AMRN at our channel by beginning of March, and it's really nice to see that it behaved exactly as analyzed, as predicted, and those who followed the analysis were able to make very nice profit on this leg. And now what we can see, it's a new opening opportunity again, because we in general continue the major decline, major correction actually, and we are now sitting at the level of with the major support level at about 5 here, and there the major play will go, because now what can be observed, starting the correction, actually continuing the correction that started by beginning of February, exactly at this moment, we see that we in general have one channel that was forming by the beginning of the correction here, and then let's draw it here. So this was that channel. It was kind of broken, but if you continue it, you see that this channel was longer. It was first broken, and on that break we made an analysis, so you were able to make the profit here. Now what we see, after another major rebounds, we are experiencing the resist from moving average 20. This is a major moment, usually is one of the major indicators on the corrective move. Until moving average 20 works as a resist line, the correction is still ongoing. And there was a kind of 2 times tryout to pierce it up. One took place by mid of March, second one by beginning of April, didn't work, so we continue correction. Now what we see, yesterday and today trading sessions, after another attempt to pierce it through, didn't happen, and we are actually now, here you can see, forming actually a newer line, so it's second channel you can say, and the new resist line actually just following moving average 20. So if you draw it in the form of the new channel, you can see that this is actually the channel, and it was broken, returned, and now it's going to be broken again. So here on this one we actually can make our trade. So if you see in magnification, this was the moment 2 times we were not able to pierce moving average 20 upwards. So coming back to the previous scale, now we can speak about how to buy here, because once the channel will be broken again, there are very interesting buy opportunities. And of course, the first buying opportunity immediately starts within this quite narrow channel, and this is between 477 and 497. The reason for this is because we still might have a kind of bullish engulfing if we start lower and then start increasing in the price just from the bottom of the current channel, which will be inside of this support resist level. So let's write it as a call out for ourselves. This will be between 477 and 497. Quite narrow, let's say, channel to buy through though, but it is as it is. So let's put it here, and this is, let's say, the first channel to buy through, expecting the quick rebounds and ability to make the profit again, returning at least to moving average 20, or in this case most probably more to moving average 200, because this now works as a very strong attractor. And to be more precise, even actually you can see that all 3 moving averages are in the vicinity of each other, so their vicinity also works as a strong attractor, meaning once the price will be lower, and the lower it will be, the bigger the distance will be between 3 moving averages and the actual price, the stronger they work as attractors. So therefore you can make profit there if another rebound takes place. And speaking of profit, we again usually advise 10 to 15%, and this is indeed the case for daily traders. For, let's say, more mid-term traders, average channel of return would be in the vicinity of 650. So if you are, let's say, mid-term trader, this will be your expected channel. For daily traders, it's 10 to 15%, and then you can re-enter if needed, buy it back again, or check other opportunities. There are many at our channel, so you can always find something interesting to to buy at the levels. What still might be happening, we know that these decelerations could be really deep, and if it won't rebound from the current channel, meaning if the channel 477 and 497, and this trending gray channel will be broken similarly as it was broken here by beginning of March, it would mean we could go even lower, and then the next support levels to buy through, and actually that will define the next rebounds possibility will be between exactly 4 and 440. So let's write it here again as a call out. So this will be second channel to buy through. We will now write also how to buy there. And so these are two technical ones. First one is a quick rebound. Second one is, let's say, if the first technical pattern is not confirmed, then it goes to the second technical pattern. And speaking of, let's say, which one is more probable, most probably actually we will have to go to the second channel. We will reflect it later on how we buy it through. And the reason for that is because we see that RSI is still bending backwards towards oversold area, so most probably it will go lower. MACD is starting the new negative, positive wave, looks like on the descending. This means that it will go in disbalance, and when this happens on declining price, if MACD is rising, usually it means that you will go even lower soon, and very nice example here by beginning of April. So this might be repeating situation here, so we could go quite deeper, and the second channel would be the most probable one to play, still with the chance of the first one to have a quick rebound. So with these two technical channels, we also need to take into account any possible risk mitigations on a negative catalyst, and this, therefore, we can look even on the bigger scale. We can see that we are already quite low, and actually it means that, coming back to current scale, that the level of 362 and all the way to 334 will be quite principal level of defense. Therefore, if there is any negative catalyst kicking in, this should be very nice last, let's say, level to buy through, and really to make the final profit and actually, rise from there. So with this being said, let's write it. It's 334 to actually. So what was it again? 334 to 362. So let's write it here. So 334 to 362. So this will be the last channel to buy in based on mitigations. What does it mean? It means that we don't discuss stop losses, but because our way of trading is it's okay to spend extra days but still exit with a profit. Therefore, we discuss buying through non-linearly, meaning that we buy with different portions, and we take into account two mitigations. So we do technical analysis, and we define the most probable, or let's say the first technical pattern, which is the first channel. Then we define the second technical pattern forming if the first technical pattern is cancelled. This is the second channel, so it's a risk mitigation based on technical analysis. And the third channel we provide to buy through is actually the risk mitigation due to possible negative catalyst kicking in, if any. Usually not expected, but if it comes, others will be exiting with big losses. You will be just buying through and preparing for really nice profit making. So with this way of trading, although it sounds a bit contradicting, the worse the situation goes, the better is for you, because you buy more at the lower levels. If not, you just keep funds for average down and you are always safe. So this is very safe approach, less risky, and you pay for that risk with time. So you spend a little bit more time, but at the end you exit with a profit or with almost no loss. So this is really best optimization for not having losses in that sense, still being, of course, daily trading approach. So these are 3 levels to buy through, and asking ourselves how to buy, and taking into account that the second channel is most probable. Here we take 6 portions play. Usually it's 5, but in this case it's 6. What does it mean? It means that you buy with 1 portion in the first channel. Then if it's cancelled and we go to the second level, then you buy with 3 portions through the second channel, and if there is any negative catalyst kicking in, then you buy with remaining 2 portions in the last channel. So this will be the way to buy here. And buying through the channel means that, for example, if you are buying in the second channel with 3 portions, it's not that you buy with all 3 portions immediately once the channel is activated, so at 4.4, but it means that you start buying from the top of the channel and you buy slowly through it in the way that your, let's say, average price within the channel is very close to middle of it. So once the rebound takes place, you can make the maximum profit and have the lowest average down possible with this pattern. So that's the way to trade. This is the way of strategy, and this is the trading card. What does it mean? It means that you can actually save it, print screen it, print it out if you like, and use it as a guidance to trade with AMRN for coming days. Overall, stock is very volatile, but also brings a lot of opportunities. So good luck with it. Don't forget to subscribe to our channel. If you're first time watching this video, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.